Assalamualaikum. Hi, my name is Nur Atira binti Zulkifli. Today I will presenting about this subject which is the FIN420. I will presenting for our lecturer is Dr. Muhammad Faizal bin Basri. Here is our team member, which is the first one is Marsha Dalili, the second one is Nur Atika Huda, the third one is me, Nur Atira, the last but not least is Kamalia Kusti. So here is the company that we choose, which is the properties companies. They have a few properties company that we already choose, which is the Tabung Transportation, Eco Development, Bursa Malaysia, and also Tsunami Properties. Okay, let's talk about the background of the company. The Eco-World Development Group Berhad is established in 1974 and publicly listed on the main market of the Bursa Malaysia. Has evolved into the one of the country the most recognizable name in the property development, operating from the corporate headquarters at the Menara Eco-World in Kuala Lumpur. The company is not just building the homes and office, but for the crafting variable sustainable living space that reflects a long-term vision of the environmental and social harmony. Eco-World operation is span residential, commercial, and industrial development with a project located in the high-growth corridors such as the Klang Valley, Iskandar Malaysia, and Penang. Beyond Malaysia, the group has made its mark internationally through the Eco-World International Berhad, with the register in the United Kingdom and Australia. It enhanced its stature as a globally respected developer. For their tagline is "Creating Tomorrow and Beyond", the company aims to develop the modern physical structure. It seeks for the nature-lasting communities rooted in the in sustainability, inclusive and innovative. This vision is reflected in the core brand pillar. Crafting experiences centered on the people, promoting balance and green communities, and also want to ensure a legacy that endures for our generation. In recent years, the eco-world has reached a remarkable financial milestone. The company is already secured the sale of the 3.8 billion in 2022, following by the recording setting is 4.07 billion in 2024. Additionally, it achieved sustainable net profit of 303.5 million in 2024. It's the highest ever. That want to highlight this consistency, growth, and market confidence for the Eco-World Development Group Berhad. In this slide, I want to talk about the liquidity ratio for the Eco-World Development. Our formula to count the ratio for the current and quick ratio, which is the current ratio is we need to current asset divide by current liability. For the quick ratio, we can find the current asset minus inventory and divide by current liability. As you can see in our graph, in 2024, our current ratio, which is 1.15, in 2023 have a bit increase in which is 1.58. In 2024 also have an increase 1.63. But for the quick ratio, have a bit increase in increment, which is zero for the current ratio for 2024 to 2022 0.48. In 2023 is 0.76, but in 2024 is 0.74. The current and quick ratio has improvement over the 3 years, indicating that to enhance the short-term financial stability. The current ratios consistently increased in 1.0, with suggesting that EcoWorld has sufficient current assets to cover their current liability. Okay, in this slide, I want to talk about the leverage ratio of the Eco Development Group per head. As you can see in this graph of this chart, we have two types of leverage ratio, which is the first one is debt to equity ratio. The second one is time interest and ratio. The debt to equity ratio declined from 1.02 in 2022 0.82 in 2034, that showing the company reduced the reliance to debt and strengthen its equity base. This trend is highlighted to improve the capital structure and reduce the financial risk. As you can see in the time interest ratio have improvement from 3 in 2024 to 4 in 2000 in 3 2022 to 4 into 2000 in 2024, that indicating the stronger earning and a better ability to serve the interest obligation. This reflects to enhance the financial health and lower the risk. For this slide, I will talk about the activity ratio of the Eco World Development Group ahead. As you can see in our chart, we have average collection period and also fixed assets turnover. For average collection period, it takes approximately about 75 to 79 days to collect the payment. The longer collecting period in 2024, that suggests a slight weaken in the collection efficiency. But for the fixed asset turnover, a bit strong and improving the turnover, they indicating efficient use for the fixed asset. For profitability ratio of the EcoWorld Development Group, we want to discuss about two type of the ratio, which is the gross profit margin and return on asset. In gross profit margin have increased from 24% in 2020 in 2022 to to 27% in 2024, is showing improved cost efficiency and stronger control over the production and project costs. This it means a higher portion of revenue is retained as a gross profit and enhance overall profitable. But in the return on asset from a bit have rose from 1.67% in 2022 to 3.40% in 2024. It's indicating that the company is using its asset more efficiently to generate their net income. The raising ROA reflects a better asset utilization and improved operational performance over time. For the market ratio of the Ecoworld Development Group Berhad, we want to talk about the dividend payout ratio and price to earning ratio. A high payout ratio in 2022 and 2023 that indicated most of the profit was returned to shareholder, but a reduced ratio in 2024 reflects a more balanced reinvestment policy as a profit. But in price to earning ratio, it reflects stronger investor confidence in 2022, despite lower in ESP. In 2034, even though earnings improved, but the PE ratio remains high, that indicating the sustainable investor optimized.
Assalamualaikum everyone. Today I will be presenting an overview and financial ratio analysis of TH Plantation Berhad, also known as a THP, a key player in Malaysia agro-business and palm oil industry. Company background. TH Plantation Berhad was established in 1972 under the name Perbadanan Ladang-Ladang Tabung Haji. It served as the plantation arm of Lembaga Tabung Haji, Malaysia Islamic Saving Institution of Muslim Pilgrims. The company was listed on Bursa Malaysia main market in 2006, marking a significant milestone in its corporate development. Next is liquidity ratio. In 2022, the current ratio was 1.02 and improved to 0.96 by 2024. The quick ratio rose to 1.05 in 2024, showing that THP has strengthened in short-term liquidity position after a dip in 2023. Next is liquidity ratio. In 2022, the current ratio was 1.02 and improved to 0.96 by 2024. The quick ratio rose to 1.05 in 2024, showing that THP has strengthened in short-term liquidity position after a dip in 2023. Next is profitability ratio. The gross profit margin improved from 20% in 2023 to 28.1% in 2024. Return on asset increased to 3.61%, showing improved operational efficiency and better asset utilization. Next is market ratio. THP maintained a consistent dividend payout of around 25% over the past 3 years. The price to earning ratio decreased to 8.1 in 2024, suggesting the stock may be undervalued despite stronger earning.
Okay, hi, my name is Nur Atika Huda and I would like to present about Bursa Malaysia. Bursa Malaysia originally established in 1930 as the Singapore Stockbrokers Association. Bursa Malaysia Berhad is Malaysia's stock exchange and it's one of the largest bourses in Asia and plays a vital role in the Malaysian capital market. In Bursa Malaysia is industry, financial service, that is stock exchange. Core business for Bursa Malaysia is first is securities trading, derivative trading, bonds and sukuk trading, clearing, settlement and depository service, and market regulation and supervision. Vision of Bursa Malaysia is to be Asian leading, sustainable and globally connected marketplace. And then the mission of Bursa Malaysia is creating opportunities, growing value for stakeholders and driving sustainable growth in the capital market. Then Bursa Malaysia plays a vital role in the Malaysian capital market. And lastly, recent development is focused on environmental, social and government, digitalization and technology adoption, strengthening regional partnership within Asia. Okay, next I will continue to present for liquidity ratio of Bursa Malaysia. To assess the company's short-term liquidity position, we analyze the current ratio and quick ratio for the years 2022 to 2024. Looking at the chart, the current ratio shows a significant decrease in 2023, dropping from 69.62 in 2022 to 46.71. However, in the 2024, it recovered and increased to 72.99. This indicates that the company improved its ability to cover short-term liabilities with its current asset by 2024. Similarly, the quick ratio follow a nearly identical trend, it declined from 69.56 in 2022 to 46.68 in 2023. Then rose again to 72.93 in 2024. The stable quick ratio suggests that the company has sufficient liquid assets, excluding inventory, to meet its immediate obligations. Overall, although there was a decline in 2023, the company successfully strengthened its liquidity position in 2024, reflecting better cash flow management and financial stability. Okay, now let's look at the leverage ratio of Bursa Malaysia from 2022 to 2024, which include the debt to equity ratio and the time interest earned ratio. Starting with the debt to equity ratio on the left, we can see that in 2022 the ratio stood at approximately 4.5, indicating that the company had a relatively higher level of debt compared to its equity. In 2023, the ratio dropped significantly to 0.75, suggesting that the company successfully again to 4.0, indicating a rise in debt financing or a reduction in equity compared to the previous year. Moving to the time interest earned ratio on the right, this ratio reflects the company's ability to meet its interest obligation. In 2022, the time interest earned ratio was around 6,015 times, increasing slightly to 6,501 times in 2023 and further improving to 7,961 times in 2024. The increasing trend of the time interest earned ratio shows that Bursa Malaysia's ability to cover its interest expenses has been strengthening over the years, indicating strong earnings relative to its interest obligations. Overall, while the debt level have fluctuated over these years, the company's capacity to service its interest payment has consistently improved. Okay, next, this slide displays two key efficiency ratio, that is the average collection period and the fixed asset turnover for the financial years 2022 to 2024. Starting with the average collection period shown in the donut chart, we can observe a downward trend. In year 2022, the collection period was 203 days, which improved to 183 days in 2023 and further decreased to 157 days in year 2024. This indicates a significant improvement in the company receivable management, meaning it is taking less time to collect payments from customers each year. This is a positive sign of improved cash flow and operational efficiency. Next, the bar chart illustrates the fixed asset turnover ratio. In year 2022, the ratio was 8 times, but it dropped to 6 times in year 2023. However, the company managed to recover in year 2024, that is increasing the ratio to 9 times. This suggests that after a temporary dip, the company become more efficient in utilizing its fixed asset to generate revenue in year 2024. Overall, this trend reflects improvement in both credit management and asset utilization, which are positive indicators of operational efficiency for the okay, next, this chart illustrates the profitability ratio of Bursa Malaysia, focusing on two key indicators, that is gross profit margin and return on asset (ROA) over the financial years 2022 and to 2024. Starting with the gross profit margin, we can observe a significant increase from 78.1% into 2022 to 99.9% in 2023. However, this was followed by a slight decline to 86.7% into 2024. This suggests that although the company managed to improve its gross profitability in 2023, it faced some challenge in maintaining that level the following year. On the other hand, the return on asset ROA remains stable at 5.60% in both 2022 and 2023, before rising to 6.05% in 2024. This indicates an improvement in the company efficiencies in utilizing its asset to generate profit. Overall, both profitability indicators show a generally positive trend, especially in terms of asset utilization, reflecting a healthy financial performance for Bursa Malaysia over the 3-year period. This table presents the market ratio of Bursa Malaysia over 3 financial years, focusing on the dividend payout ratio and the price to earning ratio. Looking at the dividend payout ratio, we can see consistent upward trend. In year 2022, the company distributed 36.9% of its earnings as dividend. This increased to 44.9% in year 2023 and further rose to 67.8% in year 2024. This suggests that the company is becoming more generous in rewarding its shareholders, possibly reflecting stronger cash flow or a stable financial outlook. And on the other hand, the PE ratio shows some fluctuation. It stood at 20.09 times in year 2022, dropped significantly to 14.02 times in year 2023, before climbing back to 17.38 times in year 2024. A lower PE ratio in year 2023 might indicate improved earning or undervaluation by the market during that period, while the increase in year 2024 may reflect growing investor confidence or expectation of future earning growth. In summary, Bursa Malaysia has demonstrated an increasing commitment to shareholder return through dividend, while market valuation has varied, possibly in response to change in earning performance or investor sentiment.
Hi, my name is Kamalia Kutsi binti Kamaruddin. The company I have chosen is Simdabi Property Berhad. Simdabi Property Berhad is listed on the main market of Bursa Malaysia since November 2017 after the demerger from Simdabi Berhad. The company has more than 50 years of experience in property development and has successfully built over 25 townships and integrated projects across Malaysia. Some of the most well-known projects by Simdabi Property include Subang Jaya, City of Elmina, Bandar Bukit Raja and Suriname City. These developments are recognized for their strategic locations, strong community planning and high-quality housing. The company's main focus is in residential, commercial, industrial, and integrated property development. It also provides services in property investment, assets management, and hospitality, offering a complete real estate solution. Simdabi Property aims to lead in sustainable and smart city development. Their mission is to deliver long-term value to customers, stakeholders and the environment through responsible and innovative real estate practices. Over the past 3 years, the Simdabi Property maintained a strong current ratio, especially in 2022 and 2023, where it was above 1.8 and even improved slightly in 2023. This indicates that the company had sufficient current assets to cover its short-term liabilities. However, in 2024, the ratio declined to 1.42, suggesting a weaker liquidity position compared to the previous years, but still considered acceptable and lower financial risk. In terms of quick ratio, the company started strong in 2022 with a figure above 1.0, showing it could meet short-term obligations without relying heavily on inventories. But over the following years, the ratio gradually dropped, and by 2024, it fell below 1.0. This points to increasing reliance on inventory to support liquidity, which may require closer financial monitoring moving forward. Let's take a look at debt to equity ratio. Over the 3 years period, the ratio stayed quite stable and remained below 0.6. This shows that Simdabi Property has been managing its debt responsibly without relying too much on borrowings. It reflects a strong capital structure. Now, looking at time interest earned, we can see a clear upward trend. Each year, the company's ability to cover interest expense keep improving. This means the business is becoming more profitable and less financially pressured, which is a really positive sign for investors and creditors. Let's look at how quickly the company collects its receivable. We can observe a clear improvement over time. The average collection period has been getting shorter each year. This means Simdabi Property is collecting payments faster from its customer, which is a good sign for cash flow and efficiency in managing receivable. As for total asset turnover, the number have been gradually increasing over the 3 years. This shows the company is becoming more efficient in using its assets to generate revenue. The upward trend reflects better asset utilization and stronger operational performance. If we look at the operating profit margin, it remained quite stable in the earlier years, hovering around 17%. But in the latest year, there was a noticeable improvement, showing stronger control over cost and better operational efficiency. This suggests the company is doing well in turning revenue into profit from its core operations. Now, for return on assets, we can clearly see a positive trend. The ROA increased each year, which means the company is using its assets for effectively to generate net profit. This reflects improving overall performance and better returns for the business. Let's look at the dividend payout trend. Each year, Simdabi Property has been increasing the portion of profit paid out as dividends. From just 21% previously, it went up significantly and reached more than 40% in the most recent year. This reflects the company's growing confidence in its earnings and its commitment to reward shareholders. For the price to earnings ratio, it remained quite stable across the 3 years, moving between 10 and 12 times. This suggests that the market consistently values the company based on its earnings, even as earnings per share increase and the PE ratio stayed within a healthy range, showing balanced investor expectations. Thank you.